Hi, Jason Watson, Watson CPA Group. Casual day here at the office today. We're talking about home office deductions where you can be casual every day, right? Let's kind of run through this. A lot of business owners think that the home office deduction is this huge tax benefit, and it just isn't. It's a good tax benefit, don't get me wrong. It's just not this massive one that everyone thinks it is. Your house is expensive, yes. It's probably the most expensive asset you own in a lot of cases, but it's not a huge tax deduction from a home office perspective. Let's talk about the benefits though of the home office deduction. First of all, a lot of non-deductible items suddenly become deductible on a business use percentage. Let's talk about utilities, insurance, if the house were to burn down, the property insurance, hazard insurance, the HOA dues, all those things are normally not deductible, but now a chunk of those could be deductible should you qualify for the home office deduction. Also, you might run into what we call SALT limitations, state and local tax. That's typically property tax related. We can maybe shift some of the property taxes over to the home office deduction and not be so limited on property tax deductions. But here's the big benefit, I believe, is in the commuting. Currently, if you do not have a home office and you drive from your home to, let's say, your first customer, let's say you're a pharmaceutical sales rep, that is considered commuting and not deductible. So all those miles and all that stuff's not deductible. So then from customer 1 to customer 2, 3, 4, 5, those are all traveling from work location to work location, of course. Those are all business miles and fully deductible. The drive home from the last customer to your house is then not deductible as well if you do not have a home office. So you try to, of course, find a customer who's close to you, make that your first customer, right? However, if you have a home office, and let's say your home office is in the basement, well, now your commute is just from the bedroom to the home office, to the basement. So you don't really have any commuting expenses. And now what you used to have as commuting expenses are now business expenses because you're traveling from your home office, which is a work location, to your customers, and then back to your work location. So that's the big benefit, especially if you put a lot of miles in your car and all that stuff. Commuting expense deduction, or to take otherwise commuting expenses that weren't deductible and make them business expenses and then deductible, is the benefit. Yes, you will get some benefit from those non-deductible items. In my analysis, most people, without factoring in commuting expenses, they'll save about $100 to $150 on their tax return, ultimately cash in pocket, by doing a home office deduction. Now that's good money, but the juice might not be worth the squeeze if you find yourself spending a lot of time trying to compute your home office deduction. There are rules, of course. There's always rules. It has to be regularly used. That's a facts and circumstances type of assessment. If you're selling handbags on eBay 1 day per month, that's probably not regular enough. Has to be exclusively used. Okay, so the space has to be just your home office, no baby cribs, no futons, none of that stuff. Let's not try to take a 6 foot by 3 foot desk and say 18 square foot is exclusive use. It really is a room that the IRS is looking at. There's also a 50-mile rule where your home office cannot be more than 50 miles away from your primary residence. And it's not really written down anywhere, but it is something that tax courts have used. It is something that you will see in IRS memoranda and all that stuff. We, on our website, we do have a blog post that shows some of the genesis of this 50-mile rule. One of the tax court cases was a surgeon had 2 homes, an oral surgeon, and he would call this other home his home office because that was close to where his surgery was done, but it was more than 50 miles away because he wanted to be able to deduct all the travel expenses between those locations, and the tax court said no. You can read about that on our website. The calculation of the home office deduction is pretty straightforward if we're using the actual method. That is basically, we take your square footage of the office and we divide it by the square footage of the home. Now, if you use your garage or your unfinished basement, then you have to add that square footage into both the denominator and numerator. So if you are saying, hey, my garage is my warehouse because I sell things on Amazon, and that happens often, that's a very legitimate example, you have to add the garage space onto your denominator as well as your numerator to calculate the business use percentage. So we find this percentage, 5, 6, 7%, whatever it is, and then you are going to apply that to all of your expenses associated with your house. Mortgage interest, not just the payment, or not the payment, just the interest, property taxes, hazard insurance, HOA dues, utilities, maintenance, things like that. And then we're going to figure out your home office deduction. Is it a deduction or are you going to get it reimbursed? If you're just a Schedule C business owner, then you will complete a Form 8829 to take a deduction against your Schedule C business income. If you're an S Corp, then you're going to do what's called an accountable plan reimbursement. So as an S Corp owner, you're wearing two hats. We've said this before on our website, other videos. You're wearing the investor hat and the employee hat. So if you worked not for yourself, let's say you worked for Google, and Google said, hey, we want you to work from home and we're going to, to reimburse you for those expenses at home, they would do it in this fashion. You would figure out, again, your expenses, your deduction like you normally do, but then you would get it reimbursed to you through an accountable plan reimbursement. What's nice about this arrangement is that you don't have big, bright home office deduction lights as you would with 8829. 8829 is business use of home. That is a form the IRS uses just for home office deduction. In S Corp land or in some other business entity land where you're reimbursing the employee, you being the employee, for the business use of the home, that gets kind of tucked in with all the other expenses. Not that we're doing anything wrong, it's just that it doesn't have the big bright lights, look at me, home office deduction type of thing. People do say, oh, I don't want to take a home office deduction because it's a big IRS audit risk. Yes, it was 20 years ago. You're holding on to some old data. Today, telecommuting is very popular, very, very popular. The IRS, yeah, I think they've eradicated some of the bad out there. They've trained us to teach business owners how to do it better and all that stuff. So we're seeing a lot fewer audits for home office deductions. I haven't experienced one in probably 10 years for one of the clients that we have. So this 8829 is not the big red flag that you think it is. If you have a home office deduction and it follows these rules, by all means, take it. Let's do it. And then again, if you're looking at it from an S Corp or some other entity where you're reimbursing yourself for the business use of the home, that's going to have a super low audit rate simply because it's just an expense that gets tucked in to the corporate return. My name is Jason Watson. Give us a call. We'll talk about your home office situation, see if it fits for you. Check out our website, wcginc.com. You can also look at our book. Give us a call, like I said before, email. And again, my name is Jason Watson, Watson CPA Group. Thank you.